Hello everybody. So today I want to report on some preliminary research I've been doing on Marathon. Marathon, of course, is the largest Bitcoin miner out there, and they have a hybrid strategy where they do a little bit of the Michael Saylor Bitcoin treasury strategy as well as the mining strategy. So they issue debt, they dilute to mine, and they issue debt, they dilute to buy Bitcoin. That's why I call it the hybrid strategy. So let's analyze Mara. So the core business, of course, is to mine Bitcoin. They have multiple sites. They're actually international with UAE, Paraguay, Finland. The most of them, of course, is in the USA. They're headquartered in Fort Lauderdale. They have interesting hardware and custom firmware development. They're also into immersion cooling. I say this is interesting, but this is not an edge. It's worth mentioning many miners develop their own software and their own thing. And, it's what you have to do to be a best-in-class, more efficient miner. What makes them special, though, is that as we have a lot of miners, the CleanSparks, the Irons of the world, getting around 30 exahash, they are telling us that by year-end 2024, which is the number I'm going to use, they're going to achieve 50 exahash. So I'm going to assume, for the purpose of this video, because we're 3 weeks from year-end 2024, I'm going to assume they already have 50 exahash of mining power. And this is where I go through the back of a napkin math using today's Bitcoin calculator, Bitcoin miner calculator. It's on NiceHash, which is a mining pool. So using that mining pool, inputting 50 exahash, what can you reasonably expect to mine with 50 exahash? Well, that's 32 Bitcoin a day is what you can reasonably expect to mine per day. Therefore, at 100,000, I'm assuming a nice even 100,000 Bitcoin, they are mining $3.2 million worth of Bitcoin a day. That is hodled. That Bitcoin is going straight into their treasury. And we have the cost, the daily cost per petahash. It costs them $36 per petahash. So they have 50,000 petahash, right? 50 exahash equals 50,000 petahashes. 50,000 petahashes times $36 per petahash. That's 1.8 million a day worth of electricity. I mean, I assume 95% of that cost is electric, even though they claim to have inexpensive electricity, nearly free electricity. It's still what I'm going to assume. I'm sure they have some labor in there. But the point is, it costs them 1.8 million a day to produce 3.2 million worth of Bitcoin. So the mining profit is 1.4 million a day is their mining profit on their operations. So the mining profit, 1.4 million a day. And I'm going to just annualize that number. I'm taking a day and I'm doing 365 times 365 and I'm getting 511 million. The reason for that is that, of course, the mining difficulty is going to increase. So the number of Bitcoins mined per day is going to decrease. It's not going to stay at 32, but to counteract that, you're going to have the price of Bitcoin over the next 12 months, which we can reasonably expect to increase. And so what if Bitcoin is at $200,000 at the end of 2025? Well, the mining difficulty may have gotten twice as hard, but if Bitcoin is twice as expensive, then it's all in all the same thing. So that's why I'm just taking the mining profit as of today, 1.4 million a day, and I'm multiplying it by 365. I'm assuming 511 million in USD in mining profits each year. And so the market cap is exactly even right now. It's exactly 8 billion in market cap. And if I divide the price, the market cap divided by a Bitcoin profit, the 511 million, I get a price to mining profits, right? So a PE, a proverbial PE here of 15.7. So this is a company in one of the hottest fields, in one of the hottest sectors, high performance computing, compute energy, the intersection of so many, hyped sectors right now, very desirable sector is trading at 15. It's trading less expensively than the S&P 500. This is showing again how cheap these miners are. I find all of the miners to be so cheap. No financial advice, of course, but Mara has the biggest Bitcoin bag out of all of the miners out there. They have 34,959 Bitcoin. That's $3.49 billion worth of Bitcoin at 100,000. $3.49 billion worth of Bitcoin on the balance sheet, and they are stacking, they are adding 14 Bitcoins a day to that pie from the mining alone. They have 165 million in cash, 639 million in debt. Note how critics are always saying, oh, these companies have so much debt. Put that in perspective, 639 million in debt, but they own the keys to 3.5 billion worth of Bitcoin, right? So you have 600 million in debt on one hand, and then you have 3.5 billion of Bitcoin on the other hand. That debt is safe, in my view. NFA, no financial advice, as always. And whenever I analyze my Bitcoin miners, my bag of napkin math, you have to make count of your own metrics. So I'm going to do a Bitcoin bag adjusted enterprise value. Bitcoin bag adjusted enterprise value. So we start with the market cap. It's 8 billion. We add the debt, right? Why not? I mean, we want to penalize company for the debt. They're going to have to pay that off at some point. So we had 639 million. Then we remove the cash, right? Obviously, cash is sellable right away. So we remove 165 million, and then we remove the 3.49 billion with a B, $1 billion worth of Bitcoin. And so we get a Bitcoin bag adjusted enterprise value for Mara of 4.9 billion. And I do the same calculation, but this time with a Bitcoin bag adjusted enterprise value over Bitcoin profit, and we get a 9.6. So it's trading at less than 10 times my Bitcoin bag adjusted enterprise value, less than 10 times. That's the cost that I look at. That's how much I think I'm paying for those mining profits. So again, I find them quite undervalued. And of course, we haven't even gotten to the best part when it comes to Mara. The best part when it comes to Mara is that they've adopted the MicroStrategy Playbook. And so what is that playbook? Well, as a reminder, but you probably know it by now because I keep covering this stock, it's you buy Bitcoin today, you dilute later. Buy Bitcoin today, dilute later. So you generate a yield between the delta of buying the Bitcoin today and diluting at a later date for an agreed upon conversion, right? Typically in the 50-ish% higher as the conversion premium. And impressively, they were able to achieve 0%. They borrow that money today to buy the Bitcoin today, that money being repaid later via dilution. They are able to do it while paying 0% in the current interest environment. Again, that is absolutely outstanding. Mara is able to monetize its volatility not like MicroStrategy. MicroStrategy is the original, but in a similar fashion. They're able to monetize it in a similar fashion. So that's the big bonus right there. That's the big bonus. You get a miner and you get a MicroStrategy playbook. Now, I know what people always say with miners. Oh, they dilute. Yes, they dilute. But guess what? All miners dilute. Dilution works differently, of course, in Bitcoin. It works differently because if you look at MicroStrategy, it shouldn't happen that a stock does a $5 billion at the market stock offering, a 5 billion ATM, and the stock goes up. That should not happen. But these rules don't seem to work in Bitcoin. In Bitcoin, it seems when you dilute, stock returns ensue because you dilute to accrete. When you dilute to buy Bitcoin, which is a high volatility, hyper growth asset, when you dilute to buy Bitcoin, you don't dilute to go acquire some third party business. No, you dilute to buy a commodity, and the market right now is really liking that strategy. So the dilution is seen as a bad thing. In most stocks, it's seen as a bad thing. In the case of Bitcoin strategies, Bitcoin treasury strategies like MicroStrategy, or in the case of Bitcoin mining, it's different. So they dilute to buy Bitcoin, and many people see it as a good thing. I see it as a good thing, and what people sometimes have a more difficult time to understand is that they also dilute. This is what the miners do. The miners dilute to fund the growth and their operations and to pay that electric bill. When you have a $500 million a year electric bill to mine all of that Bitcoin, right? So you gotta pay the bill. And how do you pay the bill in a tax efficient way? Well, the tax inefficient way to do it is to sell the Bitcoin, pay the electric bill, and then you have the rest of the Bitcoin left over, but you gotta pay your you gotta pay your capital gains on any appreciation that you have on the Bitcoin. Any appreciation when you sell the Bitcoin compared to the day you recognize that you mined it, that difference you gotta pay capital gains. In my view, the tax efficient way to do this is to dilute to pay their operations. You dilute to pay their operations, and as a result of that, the Bitcoin that you get as a result of your operations, well, it's not taxed unless or until you sell it, if you ever sell it. So that's the tax efficient way to do it. They dilute to fund the operations. Doesn't work like that for most companies, but in Bitcoin, it seems to be the way that it's working. And I'll tell you more about the other bonuses, which to me I find that is quite interesting. I wasted way too much time reading about 3-nanometer Bitcoin mining development and Bitcoin networking, and they are a lead investor in this company Auradine, which is working on next-gen Bitcoin miners. You can see this is them at the Nasdaq. Anyways, that's very interesting to me. I don't know if it's a long shot or not, because I want to point out that Mara's miners are actually not as good as some of the newer miners like IREN. Like, we are nowhere near the great IREN miners, which are brand new. They're dare I say, older miners. But, that's okay because they still make money, A. But then B, this is another very interesting venture capital type investment that they're making. So they bought these wind operations in Texas, and so what they're going to do is they're going to keep the agreement as they have it with a local utility, etc., and they're going to place their older Bitcoin miners there, the less efficient Bitcoin miners, and whenever the energy needs to be offloaded, it will be offloaded into the miners. If you follow Mara, they try to do the same thing with the natural gas flares, those big flare-ups of natural gas. They're trying to capture that energy. So they're all about trying to capture that zero marginal cost energy. So you buy energy assets, you leave them operate as is, but you're just there to capture the peaks. And so it seems that this is going to be enable them to extend the life of their miners, and it's like a retirement program. And of course, at the end of that, the miners will likely be sold to nation states who really get the electricity for free. But a lot of people think there's no life after a miner. Once a miner is not profitable after, say, 3 cents a kilowatt hour, most people think there's no life. No, that's not true. They're still alive if you get electricity for free, and they're still alive if you sell it to a nation state which gets electricity for free. So it's very interesting how they are planning to deal with their older miners. Most people sell them. They want to use them longer to mine more Bitcoin and stack more Bitcoin. So in conclusion, for the hybrid strategy, I find this stock interesting. I'm not doing anything on it. I need to research it more, but I definitely find it interesting, and this will come to no surprise to most people. It's cheap. It is cheap, but I find all of the miners cheap. The question is, the miners haven't moved much, but they are cheap. These miners are cheap. So anyways, this was not financial advice, not investment advice, just entertainment. Hoping you were entertained. Please like, please subscribe, follow me on X, follow me on Patreon. Thank you for watching, and have a wonderful, wonderful day.